What is going on, my friends, and welcome back to another video on the channel. Well, in today's video, we are going over if cryptos can or cannot realistically recover from this big fall in which we've been seeing over the short term, okay? I think we all kind of know that realistically, in the next couple years, in the next 3, 4, 5 years, we're gonna see recovery from this. I mean, it's pretty obvious. I think we all pretty much accepted that crypto is here to stay, and unless something pretty catastrophic happens just in terms of the entire world, I don't really think it's going anywhere. And so I'm focused a little bit more on the short term today in terms of what does it look like. Can we recover from this thing in the next month, 2 months, or is it something that is a little bit more extensive, and how we can go about that, okay? So looking at Bitcoin specifically, we're going to look at the charts and we're going to look at some indicators, kind of off-chain and on-chain indicators that kind of tell us what exactly is going on here. I would go ahead and say that we definitely still have the potential to see growth and recovery from this thing over the next few months here, but it is becoming much harder to do so as the price does fall up into a certain point. So let me explain what. So what we can see at the moment is, of course, that on a macro scale, we have lost our most important 0.618 to 0.786 level. Now, both on a real scale or regular scale, whichever you'd like to call it, and a logarithmic scale. Now, on a logarithmic scale, that 786 level is a little bit further down here, but on both of them, we have seen the price at one point go below it. Now, what happens based off of a macro swing low to swing high event is that at the moment in which you lose this 618 to 786 box, the door back down to your range low, which in this case is the high 29,000s, opens, right? So that means for us at this point, there is the possibility, and it is becoming more and more likely as the price does fall, that we will, of course, revisit the $30,000 level. As much as people want to scream that it's not possible and that it'll never do it again, that's just simply not true. Once you lose this key level of support, that becomes much more of a possibility. Now, do I think that's going to happen? Do I know if that's going to happen? Of course, I have no clue. You can never really gauge it, especially as the market is in free fall. But I know that it is on the table and it is much more clear within the realm of possibilities. Now, is that a terrible thing? Well, it just kind of depends on how you look at it, but it is not something that I am too concerned about until we get there. Now, the reason that I'm not too concerned about it until we get to $30,000 and then we figure out how it reacts to it is due to the fact that at this point, there are many setups, as long as we set a higher low anywhere above that level, that say that we can see some pretty dramatic growth to the upside. Now, let me explain what that means. So at this point, the way I'm kind of thinking about this is that until we hit this level down here, at any given point, this thing can turn on a dime and see a massive move to the upside based off of some of our indicators and some of our on-chain and off-chain metrics. Let me show you what those are. Now, a few of the most important ones are going to be first and foremost the Bollinger Bands on a weekly perspective. Now, the Bollinger Bands are extremely important due to the fact that they're kind of indicators of volume and kind of like how much further can it go potential. Now, one thing we know about the Bollinger Bands is that they're going to be found by taking two standard deviations away from a moving average. So you take this price, your moving average, and you do two standard deviations away from it as it moves, and of course it creates these Bollinger Bands. Now, as it gets more volatile, these Bollinger Bands will open up, and as it becomes more consolidated, the Bollinger Bands will squeeze together. But what we know is that the price of a cryptocurrency can only maintain two standard deviations away from a moving average for a very, very limited amount of time before eventually resorting back to that moving average. And we can see it on both sides of the spectrum. Up here, we touched the top of the Bollinger Bands. We were here for maybe about a month before we eventually saw the resortment back to this moving average. Even down here, as soon as we started to finally touch it, that was the sign that the bottom was in, and we continued back to the top side. You look at even whenever things are a little bit more boring, it is very similar. The moment we start to touch these Bollinger Bands, sure, we may be in it for a few weeks, but we will resort back to that moving average. Similarly back here, we saw the flu dump back in March of 2020. That signaled the bottom. We continued back up. Signaled the bottom, continued back up. Signaled the bottom, continued back up. We have a tendency of finding bottoms as soon as we do reach that macro weekly Bollinger Band envelope. So the fact that we are now at it, the fact that we have now finally touched it, tells me that at any given point from this point forward, we very easily could see a resortment back up to our moving average, which in this case is still currently at $51,000. Now, what we can also pay attention to is that let's go all the way back with all of our drawings on it. We can also see a few important things in terms of indicators. When you look here, what happens is that as the price starts to move, the RSI does as well. And whenever there are divergences between the RSI and the price in relation to each other, you can start to gauge what that means and how that may affect the price going forward. And now what we can see is that based off of, let's make me a little bit smaller here, make this a little bit bigger. There we go. So what we can see based off of our RSI is that last summer, which is our most recent macro low, we put in these lows down here. In that same time frame, we came down and put in the lowest point right here. Now, in that same time frame, as we did see growth, we saw some growth and we saw this pullback. You can see that at this point, we are still above that previous low, but on our RSI, we are now below that previous low. Now, what that's going to be is bullish divergence. Now, what this tells us, to make it as easy as possible, is that if we start to see a move back to the top side at this point, we have all of this room back to the upside to work, but we're starting at a higher point in price. So envision this. From being at 41 on the RSI, we were capable of seeing the price work its way all the way back up to 70 with a move back up to 70 on the or 70,000 with a move back up to 70 on the RSI. Well, imagine what the price can do if it starts at, say, 35 this time around instead of 29, but it's starting at 40 on the RSI. Imagine what a move from 40 to 70 could do when we start at a higher price. It means that in terms of possibilities, there is a possibility that if we see a similar move to what we saw back here, while starting at a higher price and a lower point on the RSI, there's a growth potential for us to see something that looks like a new all-time high. That's within the realm of possibilities, and it's just one example of why bullish divergences are so important. So the fact that not only just on the weekly, but on the monthly charts, we are seeing bullish divergence still, if we are able to find a reversal point at any given point, it tells me that at any given point that we see this thing start to turn around, there could be some pretty immense growth. Now we look at something like the daily RSI. We are now at a point, the relative strength index, we are now at a point in which we have not been in since we saw the virus dump of 2020. Okay, so back here we got very close whenever we saw this summer drop, the beginning of the summer drop, but we never came back down as low as 21. But if you go all the way back out to whenever we saw the virus dump, you can see that that was the moment in which we started to see the reversal. We came back down to some of these levels on the RSI in which we're at right now, and that was the point in which we started to find a bottom. Now, I'm under the belief that without the virus dump, we would have seen this, right? I don't think this would have happened. So I like to look at this as our bottom, and realistically, that moment that we came back down to these levels, boom, it was here, and then it was here. I mean, there was really not much falling left to do before we started to see the continuation back up to the top side. So considering the fact that we are basing out, finding divergences, and resetting down to crucial levels of support on just about all of our indicators right now, I am under the belief that there is a possibility for growth. I don't see any reason as to why, if we don't start to reverse and find a break of trend above this previous level of support, as to why we can't see massive growth back to the upside with the right volume, okay? Now, even if you look at something as much as coincidences, right? It could be coincidental, it could be not, but we look at our 100 and our 200-day EMA. Now, if we look at our 100 and 200-day EMA, I'm just going to turn this one and I'm going to turn this one off. Something you can see is that we're about to see the deathly cross, bearish cross, whatever you want to call it, of the 100 through the 200-day EMA. Let's take a look at the last times we saw that. Last time we saw this interaction happen, beginning of the growth. Last time we saw it happen before that, let's go back here. I don't really like to consider this, but we can consider it here, right? Boom. We saw the death cross there, beginning of growth. Let's go back. Boom. Last time the 100 went through the 200, right here, is when we found a bottom, beginning of growth. Every single time, within the last 3 years, 4 years, that we have seen that 100 EMA go through that 200 EMA on the daily charts, the growth from that point forward has followed pretty soon thereafter. I mean, it was just about right after, right? And so considering the fact that all of these things tell us that the likelihood is we have massive potential to see growth back to the upside based off of historical data, all it takes is us finding that reversal, and that's all I'm looking for. Do I know if we're going to find a local low? No, no one knows, right? But at this point, that is why I'm still remaining so bullish as long as we are above these levels. Now, remember, I told you guys I would be less bullish if we lost this level, and we have. I am less bullish now than I was whenever we were still within the 618 to 786 box, but my full bullish, sentiment and my bullish thesis is still in play until we would to see that, a local low being set on the, more of a macro scale. Okay. Now, looking at this thing on some of our more on-chain metrics, you can also see that there are setups very similar to what we've seen in history that say that we can see some pretty extreme growth. If you look at something like the exchange well ratio, I want to point out to you how this thing looks right before we see big growth, right? So just to kind of break down what the exchange whale ratio is, it means that it is the ratio of the top 10 inflows to the total inflows of the exchange. High values indicate whales are using the exchanges in large amounts, so whales are being active. Now, I want to show you guys what it looks like right before we've seen growth over the last 2 large macro moves. What it looks like is that we start to see the whales kind of increasing, so we'll start to see the price decreasing. The black line's the price, the blue line's the whales. So we start to see the price decreasing here, as you can see. Now, throughout that time that the price is decreasing, we can see just on average that our whales are starting to, they're still growing, right? We're starting to see that whale activity increasing as they're probably accumulating or doing something of that nature. We see the exchange whale ratio growing. But something happens always right before we see that big boom, which looks like the whale's just slowing down. And they slow down. And you start to see these spikes declining. And you start to see that average decreasing. And then boom, we hit a bottom. We see that big tick to the upside, which signals the beginning of growth. Now, look similarly back to what we saw, last summer, in which we could see the price decreasing, but the exchange whale ratio increasing. And something happens right here, in which we see the price look to start to spike, and it doesn't have that same momentum that it had over the last couple of weeks, couple months. And then as it's slowly not doing too much and kind of going into a bit of a downtrend, boom, we see the spike, boom, we see the spike. That's when we start to see the growth. And look at it right now as how the price has been increasing and increasing and increasing, and these spikes are getting bigger and bigger and bigger. But something's happening now to where the spikes aren't growing like they used to. And this is slowly decreasing and slowly getting more steady. What does history say? Boom, we see that increase. Boom, we see that resolution to the top side. Based off of our last macro moves, that is how these things look. This is how they look right before we see growth. Is it coincidence? Sure, it could be. But I'm just telling you guys what I see. Whenever we look at something like inflows versus outflows, there's a balance. So whenever we know, what do we know about inflows? What do we know about outflows? Well, inflows basically means people moving their money, moving their crypto back off of some of their external wallets, back onto exchanges because they want to sell, okay? Increase of inflows usually means that selling pressure is increasing. And what we can see right now is that in terms of our inflows, we did see a spike. And we are seeing this growth in inflows, people wanting to sell. But whenever we look at outflows in relation to it, there is a much stronger and more consistent spike that we are seeing right now that has a little bit more volume at some of these levels. So what that tells us is that there is still the same amount of people. Although there are people selling, sure, there is still a significant amount of people who are accumulating at these levels and moving the crypto off of those exchanges out to some of their external wallets and are holding and are decreasing that selling pressure, okay? And so we see that happen time and time and time again, in which we'll see the inflow spiking because people are selling like this back in the summertime, that inflow spiking, but we start to see that strength coming from the outflows, in which we start to see it looking a little bit more consistent, a little bit stronger, which has led to growth. Okay. And so with that being said, there are many reasons as to why I am still bullish, but these are the most prominent ones right now. Is my concern growing? Yes. Am I getting a little bit more concerned that we may see more of an extensive multi-month drop down to some of the lower levels, which could look as low as $20,000? Yeah, that is still possible. But at this moment, there are still the possibilities and there are still setups with very obviously in the market that based off of history, if we do something even relatively similar to what we've seen before, could lead us to see growth at least back up to the $50,000 level at this point. So with that being said, that's my opinion on what we're seeing right now. I do believe that recovery is still extremely possible. And until I think that, it's looking much worse, I'm going to probably keep that sentiment. Of course, there is bullish bias. I have hundreds of thousands of dollars invested into crypto. So likelihood is I'm going to have some type of bullish bias to me. So you shouldn't base off of all of your research on just me. Go look at some of the bears. Go see the perspectives and the points that they present because there could be some truth in that too. And so with that being said, that is going to be about it for today's video. Of course, if you guys did enjoy, you can simply always let me know by smashing that like button and subscribing to the channel if you are new. And I'll see you all next time. Peace.